Hi, this is Helga, Helga's Homes. I recently received an email from Wendy McKinnon of Mac Mortgage, and it started with, she said, "Hey, Helga, apparently it's not enough for the Bank of Canada to commence a record number of rate hikes, but for the bank regulator to tack on additional rules and hurdles for new buyers to qualify for a mortgage." So this kind of tweaked my interest, and I thought that I should, check in with Wendy and get her to explain this to me and to you. So Wendy, thank you so much for coming today and speaking with me. And we look forward to some insight into this. So what's going on?
Okay, well, you know what? Thanks, Helga. I appreciate the opportunity to share this kind of, new information that we're learning from the Bank of Canada. Obviously, we already have seen rising rates over the last year. But what's up now with these potential mortgage rule changes? I thought it was something really important to share with you and share with anyone that's looking to be a first-time home buyer or get a new mortgage. And these are things that are potentially going to change. The regulator's talking about these things, so I thought we should be talking about them too, so we know what to do about it. So using an example of a first-time home buyer, maybe looking for a price range of around $800,000, if they put down 10%, of course, that means it needs to be an insured mortgage. And my current recommendation is to go with a 2-year fixed rate. And the reason for that is while I still see likely at least another 2 rate hikes over the next January and March Bank of Canada meetings, there's a good consensus among most economists that after that period of time, rates will start to stabilize and potentially soften a little, so you don't lock yourself in beyond 2 years for most people, but of course it depends on your specific circumstances. And just looking at some basic numbers, household debts, $1,500, maintenance fees, $700, heat, annual property taxes, just some basic numbers so we can have something to compare. Today, of course, the Bank of Canada rate, prime rate is 6.45%. And as I said, I'm suggesting a 5.75% 2-year fixed rate. And today, with the way the regulator rules are working, you need to qualify for 2% over that contract rate. So that would be 7.75%. And there's some regulated debt service maximums that are important to your affordability and what you can pay for a mortgage, and that's set at 39% of your GDS, which is mostly your borrowing costs for the home, but at a maximum of 44% once you add in your total debts. So what do we think's coming down the pike? And I'm thinking by the spring, we'll have probably another 25 basis point increases. That's going to move the Bank of Canada rate up to 6.95, which would, of course, move up the 2-year fixed rate. And some of the things the regulator is talking about is making the stress test more strict than it's been. So if we use the example of instead of a 2% over the contract rate, we just see what happens if it goes to 2.5%. And similarly, the regulator is also talking about tightening the debt service maximums. And if these shrink down to 35 and 40, well, what would that do for my ability to afford a home? Well, today, under the example that we talked about, the $800,000 home, you would need a gross annual household income of around $220,000. If those spring rules come into effect, including the 2 basis point rises and the debt service getting stricter and the stress test also getting stricter, then either your household income would have to be higher. Now you would need $255,000 to qualify for that $800,000 home, or you need to look at a different price range down to more in the 725 level. And that's why, it's important, because what you can afford might change with these changing rules. And these rules are applying to basically a tier 1 schedule 1 bank, which would be giving you the best rates possible. And that's obviously what you want to aim for, if possible, to minimize your costs. So you just need to keep these things in mind. And just taking a look at, just as a comparison, some of the other rates today, just if you're looking into the market, the 2-year fixed, as I said, was 5.75 roundabout. 5-year fixed, it's actually lower. And that's, I think, indicating that rates will likely start to soften a little after the next 18 months or so. And the variable prime rate is somewhere in between those numbers. But that is going to be subject, obviously, to the rate increases. So these are some of the changes. I'm just going to go back to this screen, which shows the difference, because I think that's what's really key. So your ability to qualify for a mortgage is going to change in terms of how much income you have, and or you need to take a look at potentially a lower purchase price. So these are things to think about today in terms of making your decisions if you're into the market looking for a new mortgage.
Okay, I love the screen and looking at the numbers and seeing the difference, because it's pretty significant. People, certainly are aware that the housing prices have been softening a little bit as well. So that might help come in line, that maybe that $800,000 property is now a little lower. But on the other hand, we're not necessarily seeing sellers coming on the market or really lowering their prices. There's a bit of a standoff. Can you take the screen off share, and then we can just wrap up and figure out, really, if somebody is considering a purchase in the next, say, 3 to 6 months, what do you recommend that they should do right now?
So I think definitely hire the best real estate agent you can find. Obviously, that would be Helga.
Right.
And once you've done that, I think it's very important to check your own mortgage qualification. And then so to do a pre-approval with a rate lock is going to help you out significantly, because that's going to help protect you at least in the near term while you're out in the market looking for the home that works for you. And those rate locks can go from 90 days to 120, depending on the details and the provider. But it'll give you the peace of mind to know, at my current financial situation, what can I afford, and therefore what price range should I be looking in. And it gives you that confidence when you decide to place an offer, that you have your financial ducks in a row. And you can just have the best information and I can help you compare many different providers, because unlike going directly to a bank, I've got access to 50 different lenders, including a lot of the top banks as well, to give you advice on what's going to really work best for you. And you can reach me at wendy@macmortgage.ca, or you can contact me directly at 416-994-4771. And I'm happy just to have a conversation with you about what your options are and what makes sense for you to get maybe a pre-approval with a rate lock in place.
Thanks, Wendy. That's so helpful. And that's great advice. And, I have the same advice on the real estate side, is really start with a conversation. I call it a discovery session, and we figure out, where do they want to live in the city, and where can they afford, and what type of house is it, a condominium, or is it a house? Like, what type of home? And also the fact that, starting with the mortgage piece is so important, because as you said, you'll get a rate hold for them, and then we don't feel under the gun or pressure. And that's significant and very important when you're searching for a home, is not to be in a rush, to be able to take your time and, make sure that you make the right purchase and you buy the right home. So this has been fantastic, Wendy. Thank you so much for sending me that message, tweaking me about that, and helping us all get some better insight. I really hope some of that doesn't come true. I really hope they don't change that stress test, because I don't understand. I know we're supposed to stop spending money, and they're trying to wrestle inflation and all of that. But to heap that on top of everything else, I don't know how, people will get into the market, or, real estate, it does support all sorts of the economy. So we really do need the real estate market to keep going. And at the end of the day,
yes,
people need a place to live. So So thank you so much, Wendy. I so appreciate your time today. And for anyone thinking about buying a house, certainly get in touch with Wendy, get a sense of what your options are, and really important to get a rate hike, it sounds like, right?
A pre-approval, so to avoid those rate hikes.
Right. Oh, sorry. A pre-approval to get a rate lock, not a rate
exactly.
hike.
Yes, exactly.
Thanks so much, Wendy.
Thanks.
It's been great
Bye.
speaking with you. Bye-bye.